up to you, but here on our stage, I would very much like to welcome three panelists who will join me in this conversation, and that is Mr. Dominic Hofstetter, Denise Cortes-Keizer, and Dr. Chantal Naidoo. Hello, hello. Thank you for joining me. Denise, do we have you on the camera as well? Denise, are you with us? Hello, hello. I can see that Miss Denise is with us on the call, but perhaps further away from computer. Meanwhile, I would very much like to ask Dominic and Chantal to kindly introduce yourself to our audience here. We've all had the conversation prior to this panel, but yeah, I mean, the stage is all yours. Dominic, do you want to start?
No, I'd like Chantal to start.
All right, let's go with Chantal. Ladies first, awesome.
Thank you, Dominic. Hi, everyone. I'm very excited to be part of these conversations. I've been following a little bit of them and they're really phenomenal, blowing my mind. So my name is Chantal Naidoo. I'm based in Johannesburg in South Africa. Recently returned back from the UK where I finished my PhD looking at finance and its role in sustainability transition processes. I am a recovering investment banker, very much scarred from having worked in investment banking, having done development finance work and green and climate related finance work for the past 12 years almost. Yeah, so now I do a little bit of that, but mostly working on energy transitions and finance issues, as well as continuing with an academic journey as well. Thanks.
That's incredible, such a journey. Awesome to have you on board. Dominic, do you want to go next?
Sure.
You don't have a choice.
I work for a rather unusual beast called EIT Climate Kick, which is the European Union's main climate innovation initiative. I'm in charge of building our nascent investment practice there, which takes us in the two directions at the moment of developing systemic investing for sustainability, and the other being trying to redesign the way that entrepreneurial finance is provided to entrepreneurial initiatives, also in the context of mainly climate change. I have a traditional background in business administration and finance. I've worked for a large Swiss bank for a while, then in private equity and venture capital at the intersection of finance and renewable energy for a while. I've been an entrepreneur in the renewable energy space, and I've held a number of different roles at Climate since I joined in 2015, and I'm based in Zurich, Switzerland.
Amazing. Just let me call Denise for one more time. I hope she's going to be joining us on the camera as well. Denise, do we have you now? Because otherwise, we're just going to be continuing with a lot of questions that we have for our panel. Here we go.
Hi.
Hello.
Yes, I'm here. Let me try to fix my camera because I'll try to with my phone.
Okay.
Okay. See you now.
Thank you so much. Meanwhile, Dominic, you have been developing this new model you call transformational capital. I am very eager to hear more about that. Could you share a bit more about the model and its structure?
Sure. So, well, let me first say that I haven't been developing it as much as I have been trying to synthesize different ideas and initiatives into something that approaches a coherent notion of what systemic investing in the context of sustainability transitions might look like. Noting that there is actually very little such coherent knowledge to build upon, but there is a growing recognition that the way the world has been thinking about financing sustainability transitions is, and has practiced the deployment of climate finance, is having limited potential to unleash the type of transformative effects that the world now needs and that the IPCC is calling for. And there's sort of a number of structural reasons from my point of view, including the fact that the paradigms, the structures and the practices of traditional finance orthodoxy are not actually geared to deploy capital for systemic effects. In fact, they're decidedly unsystemic. But also the realization that we don't actually know how exactly finance and financial market relate to sustainability transition. And we have one of the world's leading experts on this particular question on the call with us today, Chantal, whose PhD was dedicated to this question, and who makes some very, very salient points about the dearth of robust theoretical understanding of how capital facilitates sustainability transitions, in part because the finance people don't understand sustainability transitions, and in part because the sustainability transition folks don't understand finance. And so what Chantal and I and some other people in this space are trying to do is build a bridge between the two worlds, the bridge between the systems innovators and the capital markets. And transformation capital, as I understand it, and as I have come to call it, is nothing else than one version, one hypothesis of what that might look like, of what an investment logic at that intersection of systems thinking and finance practice might look like, that will now have to be further refined, developed, and then brought into the field through real-world prototyping to for us to understand which elements of it work, which don't, and what the promises and the limitations are.
Sorry, I'm muted. This sounds amazing already, and since you made a reference yourself, Dr. Naidoo, please, can you kind of bring us closer to understand what the sustainability transition actually means? Like, I'm not an expert, right? And I would love our audience to actually get familiar with that as well. And I can recognize that there obviously is a language barrier, not saying about the English and German and Slovenian or what not languages, but literally, what does it mean to have sustainability transition?
Anja, can I first ask you a favor?
Mm-hmm.
Could you please just call me Chantal? It's all good.
Perfect. Yeah, absolutely.
Not so formal. I'm actually still getting used to title, but I've had the name for much longer than I've had the title, and I'm just me.
All right.
Thank you. So I share with you, maybe it helps if I share with you what my dilemma was and why sustainability transition language was helpful, right? So I came to this study journey off the back of trying to speak to ministers of finance in predominantly developing countries about what kind of strategic role can they play in the context of shifting the economies from sort of a high carbon, low resilient type economy into a more low carbon, higher resilient type of economy. And what I discovered is that at that level of conversation, ministers of finance were not even reluctant. They didn't have the language, and neither did I, to be honest, to convey to them that finance has a strategic systemic role to play in contributing to moving into a more resilient and low carbon economy. Their frame of reference was largely asking a line ministry, let's say it's an energy ministry, what budget line item do you need so sectoral budget line item do you need for a project that you're wanting to deliver? And it kept on coming back to even the way we thought about finance and the way sustainability issues as well as climate related issues up until this point has been thought about is largely at a project level. So what do I need, a debt instrument, an equity instrument? How do I finance a particular project? But like what Dominic is saying, elevating it up to another level of how do you have a conversation about, I want to change a system. I want to change the system of energy, or I want to change the system of transport. No single project is going to be able to do that. You need a portfolio of actions, you need a portfolio of financial flows, but also a portfolio of both qualitative, quantitative, policy, project level type interventions as well, all coming together. So the journey started for me with that dilemma. And what I discovered over the time is that the earliest association between finance and sustainability started in 1988, just after the Brundtland Commission came out with the definition of sustainable development, what it means. And in there was a call to action for finance, saying, we need multilateral institutions mainly to start working with developing countries and others to start embedding environmental and social goals. And that in a way set the trajectory for how the sustainability movement became associated with finance. My research, I came up with like over, I didn't read all of them, I must just preface that, but there was over 2,400 and something papers that associated finance and sustainability. But sustainability transitions is actually something else. It's actually about the process of being able to move towards a more sustainable economy. And that process has certain characteristics. And I'll mention what was meaningful for me. It's also something that Dominic has heard before, but 5 specific characteristics stood out for me about the process of transition, the process of a sustainability transition, and that the field itself it's a process theory, and it's about what do we need to do and what happens during this process. And if you think about it in terms of there's an old system and there's a new system, so there's the old world that we have, let's say high carbon, not SDG supportive or relevant, low resilient. And there's another world that's actually more idealistic. You don't just jump across from the old to the new. There's a whole bit that happens in the middle, which is actually quite disruptive. And the characteristics of that relate to, there's a specific direction for sustainability transitions. It's towards, supporting the SDGs. It's towards the climate response. And there's a consistency of that direction. The second thing is it has to be done within a very accelerated time frame. So normally banks and other financiers are looking for potentially shorter lead times or longer lead times for certain investments. But there's a lot of change that needs to happen very quickly. And that, of course, creates a lot of uncertainty and disruption for the banks and traditional funders. And the third thing is that it's an interesting dynamic. There's 2 worlds competing, as I described, the old and the new, and both are competing for dominance. The old wants to hold on as an incumbent system, a dominant system. The new system, so let's say the renewables, for example, or more resilient transport systems, electric vehicles, they are trying to fight to become dominant. And based on that, so what does finance have to do in that context? And ideally, finance has to destabilize that relationship, make the dominant weaker, and make the new system stronger. And that has to be a deliberate action. And of course, all of this happens in a context of a lot of social dimensions, the issue of transition, of just transitions, which is about who's losing, jobs, how are people's lives being impacted. And also there's more stakeholders than just the project beneficiary or the shareholder of the bank or whatever that cares about this transition process. And then the last thing was about experimentation, which is something that's very nerve-wracking for financiers. They want to be certain that if you spend $1, you're going to get back $5, pretty much. So where's the room for that experimentation? And yet in a transition process, it's throwing a dice to some extent. You take calculated risks and guesses, but there's nothing that's lost in a way, because you're gaining from both sides, because you're gaining a lesson about how the process is unfolding. So that is the kind of a theory behind sustainability transitions. And then I'm happy to speak about it, a bit more as the talk progresses. What I then looked at was, in that context, like, what are the kind of ways in which the financial sector responds to those characteristics and why? Yeah, leave it there.
And I would actually love to go to that question. What are the ways that the financial, market actually reacts to all these types of things? I mean, we heard about the development of decentralized, like DeFi, and now fintech. The fintech might be an overarching topic here. Do we want to address that right away?
I see Dominic smiling.
Well, I mean, look, my lived experience is one of blank stares and awkward pauses, partially because it is in fact a language issue, as you suggest, Anja, in that the world of systems transformation, sustainability transitions has its own language and vocabulary and epistemology, etc. The world of finance has its own language and worldview and set of beliefs. So that there is a language barrier to overcome, but there's also just a conceptual barrier to overcome. And what you see is that what systemic investing entails is a fundamental change in the way finance is conceptualized and deployed. And in many ways, what you're asking the financial sector to do is change decades of, or even centuries of ways of doing business. And moreover, you're also asking them to start relating differently to this thing we call society. And that can take many forms, but what you're kind of implying there is that the financial sector doesn't actually serve society the way it should, and the ways society has come to expect it to be served. And so you're asking the financial sector to change the ways change their ways, change the way they think about their role, and change the way they relate to other people. And that's threatening in many ways, because you're threatening their status quo, and their status quo is often one of privilege and entitlement. And so, yes, there's blank stares and awkward pauses, but there's also just resistance to engaging with the ideas, because it means fundamental change. So that's a practitioner's view. What that means in on my sort of day-to-day in my day-to-day work is that there's not many mainstream financial institutions ready to come along for the journey. First of all, because they're not used to being part of a journey of discovery and exploration. So innovation in the financial sector has a very particular meaning, and it's usually one that's around products or other revenue generating opportunities. But innovation in terms of the fundamental role of money or capital or the financial sector as an industry, that's not something that financial institutions have a lot of time for. And what it means from a technical point of view is just that we need to engage with those fringe actors in that system that are ready to engage and are curious enough to come along and contribute, but more importantly, learn about what that new future could look like, so that we can start testing it and put in place the proof points that will show to the world that here's a way of doing business differently. That's at least my experience. I'm curious to hear what Chantal's experience is.
Shall I go for it, Anja?
Go for it, yeah. I do have many questions for it, but go for it, absolutely.
Okay. So I maybe quickly speak about the lived experience. For me, it's been a mixed bag. It depends on who you're talking to. So so there is a hook for systemic related investing and this kind of narrative in the Paris Agreement, actually. So Article 2.1c of the Paris Agreement speaks about making finance flows consistent with low emission, low greenhouse gas and climate resilient development. And it's an interesting article, which for me opens up a lot of useful conversations with financiers. And there's very clearly a divide between global north and global south in relation to this, this concept of contributing both to Paris, contributing to transformative outcomes and things like that. So with the North, I would say my experience is very consistent with what Dominic has shared. There's very developed economies. They have a very specific idea of the contribution. The contribution is within the realms, to me anyway, largely around large volume of projects, certain very specific actions that government needs to take to make certain policy conditions available in order for these elements to unfold. The innovation definitely is more around the product level elements. But at the same time, there are over 65 or so what broadly we could say sustainable finance related initiatives that are out there of little clusters of different actors, so central banks and private banks and development finance institutions speaking about how can they change their own institutional infrastructure to basically contribute either to Paris or to the SDGs. And you started asking earlier about fintech. There's actually a report that came out from the UN in August about digital finance and the SDGs and using digital finance as a means of it. And I see Mildred from the chats just mentioning as well M-Pesa in Kenya. And I mean, that's a great example of innovation that was way ahead, didn't label itself necessarily, as contributing to a certain thing, but just fulfilled the developmental need of inclusivity that then opened it up. So I actually find that I get more excited about working in the global south because you see different dimensions open up that is fusing the developmental trajectory as well as the climate and the SDG, elements. So Colombia and Kenya are two examples for me that are doing very interesting things at Minister of Finance level, and including with their banks. So in Colombia, they've got a group where at ministerial level, they come together, they speak about the response to climate change, and they look at the public finance budget and what they need to align to be consistent with those dimensions. This is work, that they've been doing over the last 6 or 7 years. And Kenya has taken a little bit more of a holistic approach to the National Treasury, including looking at university level education and how do you have to re-educate. The point that Dominic made about centuries in a way of finance theory and how we think about finance and how it's supposed to contribute, unwinding that, and also useful to unwind why is that indeed problematic? Its roots, why is those roots problematic for the world that we are trying to build now? So yes, it's a mixed bag, but I think I'm inspired by just keeping going at it, because I feel that, we are at the risk if you say nothing and shallow solutions may unfold. And it's the same principles that future law has been set up. If you're trying to create a new law, you can't use the ashes of the old system to build a new financial system. It's the same with what you're doing with future law. And the same would be true of the financial system, which is why this work is so important.
This is incredible. And what I'm hearing, and correct me if I'm wrong, actually, I do want to open up a discussion on this topic as well. But is it that we're no longer relying just on the states and the big actors? We are actually going down to the bottom of the hierarchy and are approaching more and more towards the individuals and the city levels. And Dominic, you are working on the city level more and more often, just because, what are the reasons to go that way?
So let me just state that from my perspective, finance is an incredibly centralized or it's not a centralized system, but it's incredibly undecentralized. And what I mean by that is that you have, particularly in the climate finance space, a few dozen institutions that would really move the needle, right? And the whole, the way in which the system travels depends a lot on what these behemoths do. And so that's true for players like the World Bank or the European Investment Bank, which is the world's largest multilateral financial institution. But it's also true for asset manager like BlackRock and others that not only have huge amounts of capital they can move, but what they do also provide signals into the system about norms and values. And I think the conversation or the dynamics are a little bit stuck in this institutionalized world. Everybody's kind of pointing to everybody else to do, to make a first move. The banks are pointing to government to act first. The governments are acting to the private market to act, to go first. The private market then says, well, but we need to do what our customers want. The customers say, well, first of all, we don't know what we want, and secondly, we only see what the products that you give to us. And so there's this finger pointing going on that I think is very unhelpful. So what we're intrigued by is to use this coming decade and the advances in fintech to democratize climate finance to a larger degree and give people a chance to not only take to the streets, and protest for more stringent climate legislation, but to actually also put some of the money behind what this future is going to look like. And at the moment, your options as a citizen investor are extremely limited. You can invest in a bunch of ESG funds, which quite frankly, I think are pretty dumb from an impact perspective. And that's about it, right? Then you can do all sorts of indirect measures. You can write to your board of trustees of your pension fund, or you can change to a more sustainable bank, but these are very indirect and very limited ways of influencing the system. What fintech is enabling is a much sort of more direct link between small sum investors and interesting, sustainability plays, particularly in the startup world. So there's now a good offering of investment syndication platforms that allow you to invest in renewable energy startups for as little as 10 euros per ticket size. And so what fintech has done is it solved the aggregation and the transaction costs that come with processing lots of small investment tickets. And so we're excited about that. But in any case, I think the work that we do directly within the societies that we need to transition, you know, within the cities and the regions, and even at the national scale with the national governments, they're very different conversations because they start out in the places where people live and work and play. And so the conversation at the beginning is not, you know, where's the project I can invest in? The conversation first is, what's the intent? What do you want to accomplish as a society, as a city? What is your version of a low carbon, climate resilient, just and inclusive society? Because the finance sector is not going to give you that answer. I mean, there's now all this talk about, let's figure out what Paris alignment means and all of these initiatives. But there's no way the big banks are going to define that meaning on behalf of society for a whole bunch of reasons, including the fact that, you know, you actually need to localize that answer, because a low carbon, climate resilient, just and inclusive future looks very different in Amsterdam than, you know, in Cape Town or in Mogadishu. I mean, we need to localize that answer and give people a voice in deciding where they want to go with it. And once you start sort of approaching the challenge from that perspective, you start making sense of, okay, if that's your future, where are you now? What are the transition pathways that your system might be taking? And what are some interesting kind of first investments we can make to change the dynamics in which that system behaves? And that's already a much more decentralized, more democratic way of conceiving, you know, of finance. And yes, then there's a role for the multilateral institutions and other, you know, big private sector actors to play as well. But your universe of potential investors and participants just naturally opens up.
I mean, there's obviously so much discrepancies, and what you just mentioned is, I mean, what I hear is that there is no common denominator, because the cities are so different, because the actors are so different, because the domains are so different. But then how do we move forward? How do we create new financial theories for sustainability? Is that... So
Anja, so I have a slightly different view. I mean, there is a common denominator. It's the least common denominator. It's called the Paris Agreement. Mm-hmm. And it says things like, I mean, it's relatively specific on the emissions front, because emissions is something we can measure, right? And so we know what the carbon budgets can look like, and we know what we've spent already, and we can calculate what that objective looks like. The moment you move out of emissions, and mind you, the Paris Agreement is full of social objectives, which are immeasurable in some ways. I mean, I think the SDGs have, I don't know, 264 or so indicators. So there's ways of making sense of it and measuring some of it. But the reason for why the finance sector is confused is because the UNFCCC in 2015 said, here's the objective, you know, Article 2.1c says, make financial flows consistent with the goal of the Paris Agreement. And now there's this frenzy of figuring out what the heck that means. And it's taken us 5 or 6 years, and, you know, we're not even close. And so what the world has figured out to do is to kind of work in the emission space. So we know how to build wind farms and solar panels, right? So we kind of, you know, and there's now a pretty mature financial sector in that space, supply chain that, you know, takes care of building those projects. But the moment you move into messier systems, into cities, into forestry systems, into coastal zones, into transportation systems, it's less clear what that Paris alignment looks like. But, you know, there is at least a starting point. You know, it's this document we call the Paris Agreement that is the least common denominator, that least, you know, raises a lot of questions, maybe more so than it answers.
Maybe I can comment on that, about the Paris Agreement being a common denominator and 2.1c. I actually, I might have a slightly nuanced view on the 2.1c part. I think, first of all, for me, it's an interesting dynamic. Like, who owns the Paris Agreement, right? Is it all of us? Is it it's the member state document, right? And whose responsibility is, you know, who are, sorry, those objectives to, you know, A, B, and C, the emissions, the resilience, and the finance objectives. So for this Make Finance Flows objective one, the reality is there has not been any negotiation or opening of negotiation of 2.1c in the member state environment since, you know, the Paris Agreement was forged in 2015. It's kind of just been left, you know, in square bracketed. This year is the first, I think, in Katowice, at the COP in Katowice, there was a mandate that in every second year, the UNFCCC releases a biennial assessment of climate finance flows. And this year is the first year a chapter on 2.1c will be developed, and to start giving voice to, well, what is happening. And what is interesting, because I've been part of this journey a little bit, is what is interesting is that there is so much happening around either claiming direct or indirect alignment with Article 2.1c. And the language is interesting. It's not about consistency, it's about this alignment language. And I'm still trying to get my head around and you're a lawyer, I think, Anja, right?
Mm-hmm.
Okay, so words matter, right?
Mm-hmm.
So if I say alignment and then I say consistency, like I'm saying two different things. And I actually mean two different things, because if I meant the one, I would just use that word. So for me, it's fascinating, and I'm still trying to figure out why is the word changed. But I actually, maybe to play devil's advocate a little bit, I think in some ways, Article 2.1c of the Paris Agreement is being weaponized by the financial sector to some extent, and they're defining it. They're defining what finance flows might look like. There's so many pacts going on around what each of, you know, and not that these things, when I say weaponized, it's almost in a way that they're leading the definition. And as Dominic rightly points out, the finance sector is not going to be the one that tells you what your vision of a resilient economy looks like or a low emission economy looks like. But they are defining what that means from their perspective on finance. And what's interesting for sustainability transitions in a way is that it's meant to be the characteristics of a process is supposed to define the need, the financial need. It's actually supposed, you need to flip this around. So imagine a conversation where a minister of finance is sitting with the head of, you know, some of the local banks and all of the other parts of their financial system and saying, I want to achieve this and I don't care, and you need to just do what you need to do to make sure that this happens. It's a very different conversation that we have from finance now, which is largely about, we think we can define this more or less like this within parameters that kind of work for us. And this is what we will offer, you know, to the system. And that's why it's important for initiatives like Transformational Capital and other initiatives that actually challenge some of that rhetoric, that actually goes and interrogates some of the theories of change of these initiatives that are out there, and claiming alignment with Paris. And it is different at a national level, at a subnational level, who you're asking, and the different levels of flows. Mm-hmm. And what I actually discovered in some of my research, but maybe that's a bit limited and I'm always open to finding far more, is that the small to medium enterprise type finance, where we, especially after COVID, you know, where's the big companies are downscaling, we're going to need growth coming from entrepreneurial activity, and we need greener types of entrepreneurial activity to inspire that. And the conversation around finance for them is not really that advanced, which is probably why digitization of finance and other initiatives and, you know, crowdfunding, blockchain, those things offer a useful challenge to kickstart it.
You just mentioned, I mean, the SMEs and the big companies. I mean, I do want to draw the attention towards Bill Gates just a couple of days ago announcing his own plan for climate change. And then earlier this year, I think it was Bezos also announcing that Amazon is going to be providing, what was it, $10 billion into the system just to tackle the climate change. What is your positioning? How do you see that? Is that also a transformative step to make? And how do we spend that money? I mean, where does that money go?
So look, so I feel a little bit conflicted about it, because what you see happening in the world is that you have governments in Europe, including the EU government, that's taking very strong action on the issue. In the US at the moment, you have a political environment in which climate action is not a priority, actually to the contrary. And so you see philanthropists step up and, you know, basically step in on behalf of an unfunctional government to do what, from my perspective, government's here to do. And so that's kind of a bit of a sad testimony. Now that being said, I think, you know, we can't be too picky about who's helping, because the world is now in such dire straits that any help is useful, or at least the majority of people's contribution are useful. Now, when it comes to announcements like Jeff Bezos's, what I think what also needs to be recognized is that, you know, Jeff Bezos is not the first person trying to support with, you know, financial resources climate action. And it's not actually as easy to just say, here's 10 billion, let's do something good with it. There's a huge question of what do you actually do with that money? And it turns out that the climate action community, if there is such a thing, at least the climate action community that this money can reach, conceivably, is not actually well prepared to handle $10 billion of money, because it's a system that's attuned to handling hundreds of thousands, maybe a few millions of grant money for any individual initiative. And then if you have bigger initiatives, they become very problematic, which is what we see in some of the big projects that the European Union is funding, for instance, the Human Brain Project. And so the Bezos Earth Fund is in a bit of a bind, because it either needs to commit to building an operational backbone of the size of the Clinton and the Gates Foundation, which is massive, or it needs to pick a number of very large projects or initiatives which are problematic in many ways, and there's a huge risk that actually the money will be spent ineffectively. So again, I think overall that's a good thing, but it's not universally kind of, oh, that's so great, now all our problems go away, because, you know, it's also a little bit ironic. I mean, Amazon is a source of enormous, I mean, it's a source of consumerism, which is at the heart of, or it's a propellant of consumerism. It's not actually, it didn't invent consumerism, but it's certainly a propellant and a catalyst of consumerism. And consumerism is at the heart of the sustainability crisis. It's also a place that, you know, is kind of has a mixed review or track record from a social equality point of view. So I think Jeff Bezos's time and effort would actually be spent more effectively on, you know, in a different way than just make available $10 billion of his wealth. So I think, again, all help kind of is helpful, I guess, at some point, but let's interrogate what kind of help it is and where it comes from and what it wants to achieve.
And Chantal, I mean, I'm curious if you agree with what Dominic has now stated, because previously I heard you saying that there is no oversight body almost, and there's a lot of projects, and a lot of projects are getting the finances, but like if we're not having an oversight body, if we're not having somebody lingering above everybody, then how do we know what's happening? How do we know that we are collectively making an effort and that we are moving forward? Is this something that is now being replaced by these big companies like Google and Amazon and Bill Gates Foundation stepping in and almost like providing that space, or is that contributing to fragmentation again?
I'm not sure how to answer this question, Anja. I think that, first of all, I have a nervousness inside of me. I think the nervousness comes from a sense that I'm not sure the quantity of money in the world is the problem, and, you know, the availability of all of it is necessarily the problem. I think that there is something else that sits behind the ethos of how money is used and for what purpose, and the vision of that, you know, partly stuff that Dominic has also, you know, alluded to. And some of the globals, you know, the whole corporatization of our world, the globalization, where corporates actually have a whole lot more power than, you know, even nation states to, you know, to some extent. That makes, it makes for a very difficult space as well. So the absorptive capacity of that money and where it goes and how it's utilized matters in so much ways, much more than, you know, how much money was actually even physically made available. I don't think that it's helpful to necessarily have a big brother approach, you know, to use that frame of like an oversight and checking and whatever. I think there's almost like, I can't say it's a lack of imagination, but there are some blind spots in that maybe it's a narrative in our minds or a framing that if we had enough money, we would be able to do the right thing. But that's not necessarily the case. You know, it is what helps us to do, because a little bit of money can make a massive difference to a small country or, you know, a small type project. But if it's thought through, if it's understood what it's going to be used for, how is it going to be applied, what is the benefits of it, and how is it going to contribute to that systemic change. So I see some of the initiatives that we are developing and unfolding as spinning like a hamster wheel. In a way, there's lots more money coming in and off we're going, and we're doing projects, and that also the culture of these big funds is in a way almost a little problematic, because they're very administratively heavy, and then they become bureaucratic, and then they are staffed possibly by people that might not have a transformative mindset. So even if you had a little bit of, you know, finances available, but you had a transformative mindset, you could do a whole lot more with it, as opposed to, I need a whole lot of money, oh gosh, now what I'm going to do with it, right? So I see it rather in that way, that certainty of being able to frame it and understand the bigger picture of what we're trying to move. And the fact that we need to both move towards a specific direction, but at the same time, we need to move away from others. So those both examples you've mentioned, if they were systemically shifting their own business environment to create, you know, not just business as usual for them and also making money available for climate, but if they were going through systemic changes within themselves that showed how they were transitioning themselves, their money might have a particular ethos for similar businesses or their supplier base, you know, that's working with them. And that money could go into greening those organizations that there's actually on their list of suppliers they work with, Bezos, for example.
Eat your own dog food concept, or how
yes, exactly. Exactly.
Dominic, you wanted to respond.
I think I need to tell a couple of anecdotes, because I'm getting, because Climate Kick runs the world's largest startup acceleration program for climate relevant startups. And, you know, we've seen 1,600 startups, and we get almost on a weekly basis, some venture funds gets in touch with us and ask for a conversation about collaboration. And some of them are launched by big corporates. And so earlier this year, I was contacted by one of the big tech companies that wanted to launch an SDG accelerator, as they call it. And, you know, so first of all, the interesting thing to note is that what these companies are used to do is work with startups. And the startup is the main, if not the only way of bringing innovation into the world that they know. Okay, and so that obviously is sort of the Silicon Valley mindset, and they try and apply that to the challenges of embedded in the SDGs. And so we had a conversation about how the collaboration could look like, and I asked them, well, how do you make sense of impact? What's your conceptualization of impact, you know, as it relates to the SDGs, which is, you know, a pretty broad playing field. I mean, if you think climate change is big as a field, you know, look at the SDGs, it's everything about the world. And they say, well, you know, we don't care about that. We just want to get the first cohort in, and we use some standard sort of approaches, and then we probably have some, you know, an internal evaluation panel. And then, but maybe in the next iteration, we'll think harder about impact. I'm like, okay, you know, you go off and do your thing, and, you know, good luck, but we're not going to be part of this. And so a couple of weeks ago, I got another phone call from a company, also a tech company that wanted to launch its own venture fund in the clean tech space. And I asked, because one of the things that I spend a lot of time on is how do we need to reconceptualize the notion of impact in the context of climate change? Because I think we've gotten that fundamentally wrong by pegging it to a quantitative emissions metric in so many ways. I mean, if you think about the systemic ramifications of that framing, it's tremendously unhelpful. Anyway, so I asked them, all right, so you want to launch your own fund. Tell me, how do you think change happens in the world? And they said, well, we haven't thought about that, but we wanted to just make investments in technologies that have the promise of low emissions. And that's okay, because that's what everybody else is doing too, right? So they're all chasing the same deals. They're all assessing impact at the level of the individual unit, not paying attention to what actually happens at the systemic level, where we have well-documented effects like rebound effects or Chevin's paradox that actually, consume some of that impact. But it's just the level of sophistication is pretty poor amongst some of these players, not all, but I have yet to come across, I've recently come across one company that I'm pretty excited about, but the majority of VCs and accelerator in this space are stuck in an impact frame of reference that is 20 years old at least, and haven't actually understood this fundamental truth that single projects don't change systems.
Chantal, you wanted to make a replica to that? I saw you.
No, I'd like, yes. Single projects don't change systems. It might depend on scale. If you've got a really small, a small context and you have one massive project that, is able to do a whole host of things. But I think by and large, that adage would be true, because we're only thinking about things in singular unit of effect, because that's also our frame of reference for finance. Bankers think of risk and return, they think of short-termism, they think of, clever innovations to mitigate the risks. Transition processes have a very unique set of characteristics, and you need courage. You need the courage to know we'll be moving in a particular direction, and that entails certain, systemic changes within an organization, within a banking context. And I don't know if this, sometimes I feel like I'm going a bit batty, because it's, until I met Dominic and we had some of our first conversations, I actually thought, sure, this was a good couple of months ago. I was like, oh, there's more people on this planet that actually think a little bit similar, that exactly, you find a bit of the tribe. And it was refreshing, mostly because I think it's hard to get this kind of thinking through, into that, even into the minds of people that are doing the projects, well-meaning, and being able to do that project. Because when you do ask that question, and that's the problem with having all of that resources, those billions that are being made available by the billionaires, right? It's going to fund managers, and fund managers do what they do. They manage money, they set up processes and governance things. They have calls for proposals, and they do it in a very particular, set way, as has always been done. But if you call for something, you're going to get it. So what you ask for is what you get. If we had global systemic challenges, so if those were set up as challenge funds, for example, like this is the biggest how are we going to do this? Inspire creativity, inspire, entrepreneurship, all of that to come together and do the action of contributing to systemic change differently, not relying on single bilateral units of projects. We might be able to make some magic. But it requires us managing money differently, using money differently as well. Not only just having loads of money to do, a lot of money can do a lot of harm. Even a lot of well-meaning money can go the wrong direction and can actually set us back.
So one thing that I was observing a while ago, it might as well change severely, but it boggled me a lot, because I just couldn't understand how the emission markets actually function. And then all of a sudden I came across the emission markets as in emission exchanges. So basically what was happening is that you have a bunch of countries that are creating a lot of emissions, and then you have a bunch of countries that are creating a lower amount of emissions, and then they can trade among each other. And if there is an existing market in place, my understanding is that it's in the best interest of the market to have trades happening often. And now the question is, do we have an exit plan for that exchange of all these emissions in place, or is it just going to be existing, and is it in the interest of the market to actually constantly have an influx of all these emissions to trade among them? Okay, too hard of a question.
So look,
You want to go ahead, Dominic?
No, you go first.
No, my answer is pretty short. I'm saying this now in a public and global domains. I've never been a fan of the emission markets as a theory of change, and that comes from, again, a personal anecdote. Working in a dealing room at an investment bank, And all the traders were excited about was the fact that we had a new widget to trade. It wasn't about the effect it was going to have. It wasn't about the impact it was going to have. It was the fact that we had a new toy to play with. And I said, but don't you care about the real world dimensions of this? What difference is it going to make? And they didn't. And I could not just bring myself to support that space. And not to say that it is not helpful. But I probably have a bias towards emission markets. I'm declaring it. I'm outing my bias, mostly because I've seen more the inner workings of how, from a finance perspective, it is regarded as an instrument just to play with, and makes very limited incremental difference in any of the projects. So my short answer to your question is then I think that market would have to be done differently,
Yeah, I mean, I'm probably on the same page. I think the emissions markets, much like carbon tax, is great on paper. It's great in theory, and the theory of Chantal, I would say the theory of change is quite sound. The practice of change is what's the problem, and that's the same. And one of the issues is that in the political system, these measures, these instruments will always be undermined by those forces acting upon the political systems that have an interest in retaining the status quo. So one of the issues in the European case is that the emissions trading scheme has had too many exceptions and too high an initial permit allocation. So it never actually functioned properly. There are other cases, such as in Australia, where the system has actually been designed very effectively, has worked very effectively, until the next election, which produced the government who ran on the platform of axe the tax. And so they got elected, they axed the tax. And so the scheme was off the table again. So I think, again, sometimes the theory of change is sound, but the practice of change isn't, because it's just not how we as a society operate. We're not good at putting in place a 30-year, mechanism like this, which a carbon market would require, that you phase out permits over time, right? So your allocation of permits that are tradable goes down to zero over time. We're just not good at sticking with the plan, which is an issue because climate change needs to be dealt with over the next 30 years. And, that's a problem.
To go into a bit concrete cases, because I do see that Marina is, for example, asking, what do you think about initiatives like this one? And there's a commons transition accounting for planetary survival. Peer-to-peer accounting for planetary survival. So maybe just to bring this under the light, what are good projects? What are the couple of things that you are really inspired by, or that regain you hope?
So I'm a cynic. I'm a cynic. So, but let me give you one. I think the job that Kate Rayworth and her team at Oxford University do around donut economics is brilliant. Not so much because the economic theory behind it is all that refined. I mean, it's good. It's needed. It's important. It's on the mark. But from if you look at donut economics as a mindset, as an initiative to change mindsets, it's extremely powerful. The way it talks about it, the way it represents itself, through the donut symbol, through the donut language, the way it's, the way it can be played with, the intuitiveness of it. That's something that I find extremely interesting. Again, not as yes, also because it's an ingenious economic concept, but more importantly, it's an ingenious way of thinking about making people relate differently to this thing that we call economics. Now, one of the challenges that this initiative and others like it face is how do you make it actionable? And how do you get it from the level of economics into the level of economic action? Because economics itself, that's a discipline of thought, right? It's not a trade. Yes, you can be an economist, but economists are often theoretical people. And so oftentimes the people who need to engage with economic concepts are government officials or investors. And they operate at a different level of abstraction. So you have to make it tangible to them. And that's, you know, again, but that's the same challenge that systemic investing faces. How do you, in building that bridge between the theory and the practice, how do you get it to a point where actually you're, you know, the people who ultimately deploy the money are able to do so, are enabled to do so, and without actually requiring the concept to be simplified too far. Because that's always, you know, one of the common criticisms I receive is, oh, this is too complex. You need to make it simpler. And I say, no, we need, I mean, because that's what's, you know, what's happening, and what simplicity as a strategy does is it leads you to incrementalism oftentimes. And so, yes, it needs to be somewhat within sort of reach of people, but there's also something to be said about pulling people into it. So it was a long-winded answer for just one example.
Oh, absolutely. I mean, it also leads to reductionism, which is not necessarily a good example. Chantal, what inspires you? Same question, different answer, possibly.
I don't know if it'll be a different answer, but I think there's external. What inspires me is that we are at an exciting crossroads, I guess, as a species, where we have the chance, right, to look back and interrogate and deconstruct the reasons why we got to this place in the first instance. You know, what was useful about what we are building, what we've built the past on, and what is, if anything, is useful to take us into the future to build, you know, whatever the new system needs to be. And never before have we had that chance, perhaps in human history, to be able to do this. We've been going along in autopilot. We've accepted the theories that's been passed down through the ages. You know, the theories that hold finance together, the theories that hold economics, the theories that hold all of the other bits and pieces. So work like Kate Raworth is interesting. She is more of an emergent scholar as opposed to the mainstream economists who still, and most of how we think about the change and transformational elements in finance comes from that mainstream world, mainstream finance theories, mainstream economics. But it excites me that more and more people are rising up and having alternative viewpoints. And it also excites me movements like Rethinking Finance, Rethinking Economics. There's an academic in France, Thomas Lagarde-Sucot. He writes about finance as being all of the theories of finance is built on a very strong neoliberal agenda, which means we are going to only head in a very strong quantitative direction, whereas we need a qualitative understanding of finance, and that qualitative understanding of finance needs to come through in our business schools and the way we're teaching the future generation. So I think two things for me. The one would be, there are certain things that I guess people like all of us on this call could do within the short term, you know, to try and help activate and dig deeper and deconstruct the assumptions of what's happening. But there's also a groundswell of movement amongst the youth, amongst civil society, about challenging what they're being taught, why they're being taught it, wanting to be taught different things and looking for alternative ways of framing. And that truly does excite me. I must say that inspires me, that we are at the precipice of change. And in order for change to happen, that old system really does need to break down, and we need to create a new system. And as frightening as that is, it is also, like Dominic said, I'm also inspired by the writings of one of the professors at Sussex, Andy Sterling, who writes about this very concept about don't reduce that which should never be reduced in the first place. We are living in complex times. Every solution that is being proposed at the minute is trying to get everything into the normal distribution curve. It's safe for everybody to just agree the options within that. But the real answers is possibly in the outliers. And we struggle, you know, to go there to those outliers. We struggle because of expediency, political expediency, urgency, whatever false sense of time we might have. But you can do the wrong thing pretty quickly in quick decisions. Whereas if you thought just a little bit, 3 or 4 seconds longer, you might actually do something very different. So it inspires, and on a personal level, Anja, it inspires me to keep trying. You know, I've been working in the green space for a long time. I came through investment banking, as I introduced myself earlier, you know, being very jaded by, you know, that world, which was just about the next deal, the next this, that, and the other. And I started being interested in green issues within the investment banking environment. And I saw my colleagues and those at other banks engage with it in a particular way. And to some extent that is changing. But I don't know if it's the PR speak, if it's a result of civil society actions against the financiers and some of the institutions, if it's the promise of Paris and what, you know, 2.1c allows them to do and not do. I don't know all of those motives, but I think I'm inspired to keep trying, and I'm inspired by the young that are actually just raising their voices and saying, no, we need to be taught different things. We need to look at this differently. We need to not just accept what's given, you know, on a plate. And there's a quote that's been a theme throughout the Future Law series, which I see coming through in some of the feeds on Twitter, which is, if you're not at the table, then you're on the table. I think that's been coming through in a number of conversations throughout the Future Law series. And it struck me that somebody thought it was a typo a few days ago, but it was quoted exactly as is. I found that very nice, because I think it's the same with how finance is regarded. You know, we need to engage with it actively, not as a system that is incapable of change, but a system that we have to force deep change in that system, not just the peripheral levels of change.
I'll have to communicate that back to our PR team. I mean, we do have an incredible technician and PR team behind us, and they are working day and night, but this one never came through to me. So glad you actually mentioned it. If you're not at the table, you're on the table. Incredible. One more question that I do have, I mean, and please, if you guys have any questions, drop them in the chat. I know that there was one question coming from public, and I don't think we ever answered it. Dominic, you were mentioning an accelerator, and we missed the name. So if you remember the name of that,
no, I'm not comfortable. I'm not comfortable sharing it, because it's, you know, obviously a relationship. I mean, I want to be respectful to the organizations that approach us for collaboration. So can't tell about it, unfortunately.
Absolutely, we do respect that privacy. So we have a question from Martin, Chantal and all, just wondering if the panel thinks that cybernetics, viable system theories to manage complexity and against reduction from 1970s and before deserve some reappraisal. Viable system models.
I'm not familiar with the viable systems theory work, but any theory that helps us to embrace the complexity and engage with it is definitely worth reappraisal and incorporation. I think we need to become more skilled in that, being able to hold it and being able to understand it, for sure. So that's a short answer to Martin. Yes, I do think it's worthy of being looked at. And the name, yes, was Andy Stirling, but it's spelled S-T-I-R-L-I-N-G. He's written a great paper for Nature about 10 years ago called Embracing Complexity. Oh no, sorry, Keep It Complex. That's what he's called it, Keep It Complex.
All right. Dominic, maybe you can provide your opinion about the...
So I think, I mean, cybernetics as a overarching framework, yes. And I mean, at some point, you know, all of these theories, they rip off of each other. I think the challenge is always that many of these systems or theories, they try and tame complexity. They try and give you a tool to manage it. And yet, and as a result of that, they make, it's almost in an antithetical way, makes them antithetical, because complexity cannot be, I mean, the fundamental uncertainty that exists in complex systems cannot be tamed, right? It's there. And so that is in fact also one of the fundamental tensions in the work that I do, which is, you know, Transcap sees the world as a complex adaptive system that tries to engage complexity and fundamental uncertainty, and at the same time it tries to provide, you know, it has an element of determinism in it, as in, if you invest systemically according to this logic, then your low carbon, climate resilient future will emerge, which of course in that sort of deterministic framing is not true, because we're subject to fundamental uncertainty. So any system theory, especially the grand theories of how systems behave, you know, you have to kind of look at with a little bit of skepticism if you subscribe to the complexity notion. But it's, of course, what sells people, right? It's the stuff that makes people come back. Because if you can, and this is one of the interesting notions or observations that I've made. There's a concept out of Oxford University called sensitive intervention points, which is championed by the Institute of New Economic Thinking, which is led by Eric Beinhocker, who wrote a seminal book on complexity economics, and who also employs Doyle Farmer, who is one of the founding fathers of complexity economics, or actually complex systems theory, because he's a physicist. And the fact, I mean, the long story short, sensitive intervention points are about leverage points in the system. So where would you go, and where would a small intervention have a big effect? And it has an incredible lure for the mainstream because it's the promise of the crystal ball. And obviously the scientists say, no, you don't have to, you know, to look at it that way, but everybody does. And everybody I talk to says, oh, we got to find these sensitive intervention points. And you can tell that they're after the secret sauce. And that's fine, that's okay. I mean, it's a productive response for my purposes, but it's certainly, it's not reflective of the true nature of fundamental uncertainty.
Martin, did you get your answer, or do you want to ask more?
Great perspectives. I'm no expert, and thank you for your thoughts. I'm actually an engineer myself, a software engineer, but I'm very drawn to these. You know, we're called upon to write systems that really sort of cement in certain assumptions. And you know, when we're talking about fintech, for example, you know, this is the sort of the norm is to go through trading environments for various sort of tokens and try and reconcile those and so on. And I'm really concerned that we're baking in assumptions as an industry, as a technology industry, that are really preventing perhaps the possibility in the near term of building in, allowing for complexity and you know, forget about sort of certain bits of sort of the points of leverage maybe, but we, you know, we risk really baking in some new assumptions for another generation or so, I'd say, right away. And so I'm not really being very succinct. I think, you know, there is a lot to be said for, let's say, biomimetic, you know, biomimicry sort of approaches towards management practice, reductionism, or actually dealing with reductionism, and maybe some small steps to sort of evaluate and, you know, work with some results would go a long way to informing the bigger picture. Because I you know, Dominic, your thoughts are really valuable on this, and but I worry that by not actually, we won't get anywhere by, you know, tackling the big picture unless we actually take some small steps that might actually shine light on directions forward. So it's all pointing in the right direction, maybe.
No,
sorry, there are my thoughts.
No, you're absolutely right, Martin. There's an increasing recognition that an effective response strategy to fundamental uncertainty is experimentation and learning. And you see some of the more advanced innovation organizations in both the public and private sector adopt the portfolio mindset of, you know, creating portfolios of innovation experiments that learn from each other and doing sense making to extract intelligence to understand what works and what doesn't. And to your point about biomimicry, you know, I encourage you to read the book The Origins of Wealth by Eric Beinhocker, which actually is steeped in sort of biological theory around evolution and the fitness of different designs, and how you know, how a system cannot just jump from one state to another overnight. It actually has to evolve, you know, there, and there are certain limits of how that evolution can take place. So the language of evolution, the language of Darwinism, is all over sort of the field of complexity economics, and has now also seeped into systems innovation as a practice at large. And, you know, precisely because we don't know what works. We can't roadmap ourselves to a low carbon future because the timelines are too long, and the stories of roadmaps is the stories of of maps that lead you to graveyards in many ways. So yeah, you're right.
I wanted to mention a little bit more on something that Martin just spoke about on the assumptions, the baked in assumptions to some of the things that we do. And I think that's a very important, subtle point, because often when, and I don't want to speak abstract, but when I think about it from the context of finance and transformational capital, right, there are a lot of baked in assumptions, which is the fact that you can price things is there, that you always know what that all the rational market hypothesis in the theories that hold finance together are a set of its assumptions, which I once called it, but I didn't like the analogy. I'll just mention it now. I called it almost like the holy cow or the sacred cows of finance. There are certain things that if you speak to a banker, you cannot move that part. You cannot move the risk dogmas. Thank you, Anja. You can't move those pieces of the puzzle because then the whole puzzle falls apart. And the challenge with the transition process is it is not so simple. It's like being able to say, like where we're standing at this moment in time is like we are on the shore of an ocean and we're looking at the ocean and we know a tsunami is coming. So there isn't a risk that it's going to come. We just don't know when it's going to hit, right? So how do you handle yourself in a situation like that? What does finance do in that context? We know a lot of crap is coming down the line. COVID has shown how vulnerable we are, how poorly resilient we are as a global species and as global economies. There's no single country on this earth that hasn't been touched by it with different capabilities to respond. But we know this is just one of many little stresses that are going to come. And we can't use the tools that we had before to try and navigate this, so that the idea of adaptability and resilience within the financial sector and how they make decisions, how they're allocating finance, how they think about it, needs to be a whole lot more flexible. But I don't believe we're there yet. And I find a lot of the noise useful. And it's great that there is, willingness to engage. Central banks are talking about, transition risk and climate risk and vulnerability, and different pockets are talking about different elements. All of these things are really fantastic, but the depth of those conversations to me go back to those baked in assumptions, that we're not still going back to what is our understanding of what can't move on the basis of what actions we're wanting to take. So if we go back and say everything can change, everything about how we do business and how we do finance can change, what else might then just fall apart or be deconstructed and then come together in a much better way to have more systemic related financing? Because to the narrative that, as Dominic said up front, he's been trying to synthesize and named it transformative, transformational capital, but it's a synthesis of drawing on different pieces of elements. There are at least 11 other type of framings even prior to that on sustainable finance that flowed from the Brundtland Commission, and each one of those have got its own little pockets of how they engage and think about finance as well. And it'll be very useful to still, distill all of that and ask ourselves some harder questions, what are we saying can't move, and why, why does it have to be priced in a certain way? Why does finance have to look the way that finance does? There's also a good book, I see people are sharing books, but something that inspired me was, it was called Between Debt and the Devil by Lord Turner. And he questions this very thing about, everything that we've done in the global economy is linked back to debt. Are we so unimaginative that we've got no other instrument in the world to come up with other than debt? And it ties everybody up in a knot and nobody moves forward.
That is incredible. It brought me back to The Science Delusion, a book where I think it's Richmond. I'll check who the author is, but basically he wrote about the 10 dogmas of the modern science. And this is what led me to the assumptions that you guys were just talking about. I have one final question, but I mean, if if our audience has anything to ask, please do. Martin, though, you're saying, I'd like to separate the measurement system of agreement as to what is actually happening in the world for those discussions about the financial systems and investments, co-investments required. Debt to whom? Mutual credit? You might actually, yeah, please do ask a question.
Oh no, sorry, that was just a comment in the chat. I don't know what I was doing there, just typing away to the group, to the room. But yeah, I'm inspired by what Chantal was saying, actually. But it seems to me that just on that, but the point about measurements is that, you know, there's more than one kind of major focus of discussion. So one is about, you know, what's actually happening in the world and trying to achieve some form of agreement over that. And maybe that shouldn't be exactly the same discussion as, you know, how to finance the future and for whose benefit and what are the, you know, and these seem conflated to me at the moment. And as Chantal was pointing out, you know, these kind of silos maybe, or pockets of, you know, interest and so on that aren't really connected together. And so it's that observation that there's sort of, it seems to me important to understand and come to some sort of consensus over what is actually happening in the world without talking about fixing it and financing and how we kind of get by. And perhaps even within credit systems, there's, you know, mutual credit isn't really very well explored so far. You know, debt between whom, and for you know, it's not the first time we've as a species, let's say, tried to work with mutual credit and group systems and you know, networks of trust that don't involve a central authority. I'm speaking from the west of Ireland, and Brown law is a very, very old system of decentralized lawmaking and very, very, very resilient to colonial influence at the hands of the English. So I'm English, but yeah. But anyway, just as a reminder to ourselves that we do go back a long way, and we have traded and balanced within an ecology in other ways, rather than the sort of central bank sort of system that we have at the moment. And sorry, but thank you for giving me some floor time there.
Absolutely. So my final question would be just if you could choose one policy change that could contribute a bit more aggressively towards the SDGs, what would it be?
I thought about this. I mean, I have a personal blog called In Search of Leverage. So I thought quite a bit about what are the most effective climate actions. I think it's not a policy, it's a political change, and it has to do with the upcoming election in the US. And if we get a change in not only the White House, but also the Senate, then I think there's reason to be very hopeful for the reason that the United States still wields geopolitical power and has an ability to, particularly together with the EU, pressure everybody else in the world into certain climate agreements. Now, that's a type of neo-imperialism that maybe some of you are not comfortable with, but in really understanding where leverage in driving systems behavior comes from, it'll be on November 3rd, where a lot of change can happen. And even if it doesn't happen, if there's no change in the White House, actually the balance in the Senate, I mean, the political environment is a bit difficult, but until very recently, the balance in the US Senate was quite close to getting sort of a majority for climate action. But it's that if there's one single thing that can really move the needle, it would be a slight tip in the power balance in the US at the moment.
Let's see what happens in November.
That may be a Western-centric view, so I'm open to criticism to that.
All right. What about you, Chantal?
I must couch it by saying I don't believe there's one single thing. As with anything in life, there never is. But I think what I feel good, what would make me feel lighter, is that we are living, so given COVID and given all the challenges that we are dealing with and the levels of impoverishment and inequality that's growing in the world, I think that there's room for, unfortunately, financial exploitation of the most vulnerable and the poor, because they are going to be the most desperate. So the loan sharks, the debt, their level of indebtedness is more than likely to increase just for the sheer sake of livelihood. And in some, in some jurisdictions, there are people like loan sharks that are just lending, money lenders, out of the system, in the shadow banking system. I think it would be great if those shadows were, light were shed on those shadows, and we could strengthen the hand and become more of a help those that are struggling with livelihoods and being forced to go into a debt situation. Find better ways of doing that, and I think some international effort around that, would be helpful, because I think we are beyond climate, and climate is coming, but we have a humanitarian problem that is exploding, and the aftermath of 2020 is only going to be felt next year and the years after, the reverberation effect of loss of businesses, loss of lives, loss of jobs, loss of livelihoods. And so personal levels of indebtedness is more than likely to go up. So policy work and deep action and some kind of legal protections around that, for me, would be a valuable start. So people don't feel beholden, because when people feel desperate, they don't act in the best interests of others or themselves or the environment. So whatever we can do to not allow people to feel desperate, and build safety nets, to me would help the planet as well.
That was incredible. Thank you both for sharing that with us. Maybe just to conclude everything together, I mean, we were talking about Kate Raworth quite often, and she has this donut economics book, and in the preface, I believe, she explains where the word economics comes from, and it's based in Old Greek from two words, oikos and nomos. And it's quite incredible to see that nomos stands for the laws, while oikos is actually a householding arena. So while thinking about the financing and while thinking about how we might be progressing for the SDGs and how we get there, because it really was not only about what the final results are going to be, the ones that we desire and want to see, but really it is more about how do we get there. And just like Chantal and you, Dominic, were previously speaking about, it's all about the progress. It's all about the process that we put in place and what the characteristics of that process are. I do believe that we're going to be able in the future to take care of our little household called the planet, or perhaps even the outer space, since we're all into that as well. But yeah, I thank you very much for joining us on this panel. It was incredible having you both here. I know that there was previously 4 panelists supposed to be here. Denise from Africa and Michal Zapa were also supposed to join us, but they apologized because there were some emergency. Anyhow, I do want to thank you both again. I hope you all enjoyed it. And if you want to further progress all these conversations, or if you have any questions, I do believe that there is a link to Dominic's Medium post, so your blog. And Chantal, if you have any contact information or any website, please just post it into the chat. I would love to connect the audience with you directly. And otherwise, just join our LinkedIn group or join our WhatsApp group. We have plenty of conversations started.
Brilliant. Thank you, Anja. Thanks everybody for listening. And speak soon, Chantal.
Yes, thank you, Dominic. Okay.
Bye.
Enjoy.
Bye.